This is another episode to be documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And this is another day of the market simply giving me my setup. And I'm just following the process that I repeat on a day-to-day basis, and it works. And that's it. So I'm kind of taking a step back and realizing, damn, I'm actually profiting. Like, what the fuck? It's surreal because I've never done this before. And I've been working at this for over 2.5 years now. So, I mean, I literally almost teared up earlier today once I realized, like, oh shit, dude. This is what my equity curve looks like now? Like, it's going up. It's actually going up for the first time ever. And I've literally given this my heart, my soul. I've given this everything. And I'm doing it. Although this is literally just the eval for a Top Step account that I'm trying to get past, like, I'm actually doing it. Like, I'm telling you guys, I've never done this before. It's kind of surreal. But I know that the work that I put in, all the hours, after all these years, it's showing up. And it just comes after I've defined one process, one system, one model that I'm following, and just doing that. Because the market gave me literally exactly what I look for in my bearish premium gap opening setup, where we have a gap up opening, and then the market reverses, and I sell it looking for a gap fill. So let's get into it. So the optimal market approach, this is how I'm framing our market approach. This is how I write a bias for the day. The first thing that I want to take into account is how I feel for that session, because how I feel about the day, if I'm confident in if the market's going to go higher or if it's going to go lower, is going to affect my decision making intraday. In this case today, I'm extremely confident that this is going to be a presentation of my bearish premium gap opening setup, because this time narrative is there with market criteria to support it. So when I have a high probability market approach, I'm combining higher time frame narrative and market criteria, putting those two together, and I have a really good idea of how that daily candle is likely to paint. So the draw on liquidity that I established today was Asia sell side, Asia lows. And my bias, what is my bias? So when I'm formulating a bias, when I'm thinking about how that daily candle is going to paint, I take two things into consideration. The first thing being higher time frame narrative, which is going to be derived from the weekly and daily chart. And the second thing is going to be market criteria, which is how the market is setting up in the overnight and pre-market session. And then the third thing I want to ask myself is, how is it going to get to the draw on liquidity? Basically, how am I expecting the market to unfold after 9:30? So if I read these here, you can see I believe the narrative is there for me to play bearish premium gap opening because it's the day before FOMC. So I'm not expecting another large up close day. It's likely to close indecisive. So as price trades higher, I can take it back inside the range. And we have an overextension of the impulse swing made yesterday, which is the only way I can play this setup if the daily / weekly is bullish. So right here, you can see that I know the exact situations, the exact scenarios I can play this setup. I can still play this setup on the short side, but only if we have an overextension of the impulse swing made yesterday, which is the case today. That's the only way I can play this setup if the higher time frame daily and weekly is bullish. So market criteria, I really like how Asia and London lows are left intact as price trades up in continuation of the impulse swing yesterday. I'm also noting the 15-minute change of the state delivery, the hourly change of the state delivery, so price may not need to make a new high day to break lower. So how is it going to get there? I want to see first how price reacts to the 1 hour sell side imbalance buy side efficiency and 15-minute inversion fair value gap at 9:30 to see if it gives me an indication of weakness. If not, then I'd wait for price to fail at a new high day. I'd need to see price trade away from the 4 hour buy side imbalance sell side efficiency low before and after the open. So I'm just going to break it down for the chart. And when I reference something that I've mentioned in my pre-market plan, I'll make note of it. So why am I looking for lower prices today, even though this is what we're doing on the daily time frame? Why does it make sense for me to be a seller? Well, the first thing is I know my annotations are kind of messy. I was basically just noting everything that all the reasons that I thought for the market to want to trade lower. But if we look at regular trading hours, which is where we settled yesterday at 4:14. Damn, this is messy. Maybe I should just use a clean chart. Let me just hide all this. I'm going to put it in a group, call it annotations. There we go. And I'm going to hide it and then I'll redo everything. Okay. So regular trading hours. This is where we settled yesterday at 4:14 p.m. Eastern Standard Time. That's the end of the regular trading hours. And then where we open today at 9:30 is what creates that gap up opening that we see right here, right? So first things when I come into the market, I'm looking for a solid gap up opening, or a solid gap opening, not necessarily just a gap up opening, but I need a solid gap opening. We have that, and it's about, this is the NASDAQ, right? I'm trading the NASDAQ. It's about 50 handles, okay? So I'm looking at the daily time frame. I'm looking at what we did yesterday. And what did we have yesterday? Yesterday was Monday. We had a large up close range that basically just left the all-time high. So we're cruising well past the previous all-time high. Markets made a new all-time high. We settled on the high, near the high of day yesterday. And then what do we see in the overnight session? We basically just have one single impulse swing, right? Because in the overnight session, at the start of the next daily range, the next Asia session, here's the 6 o'clock open today on today's range, right? Because the market closes at 5 o'clock. That's the end of electronic trading hours. Opens the next day for the next daily candle at 6 o'clock Eastern Standard Time. We literally just have a continuation of that. The market just keeps pushing higher. So what we have here is an overextension of the impulse swing that the market made in the previous session. If this is where we settled yesterday, right here, we can see how that daily candle painted, right? If I put these side by side. Strong up close candle. And then today, in the formation of this premium wick, we see a continuation of that. So what I'm noting right here is that we've gone way far into a premium without ever seeing one run on sell side liquidity. Do we take out any old lows in the overnight session? No. Instead, we leave what? A nice, clean, smooth edge. We have a gap up opening, large gap up opening. I'm noting how we have a change in the state of delivery on the 15-minute time frame, right? If the market was bullish, this gap would support price, but it doesn't. It gets inversed. You can see that the market spends a lot of time in this gap, never comes off of it, fails, close below it, inverses this gap. So I know that there's a change in the state of delivery in two ways. Number one, this imbalance becomes inversed. An inversion fair value gap is a change in the state of delivery. And number two, this consecutive series of up close candles, the open price of that is violated. So change in the state of delivery on the 15-minute time frame. If we look at the hourly, we also have a change in the state of delivery because the opening price of this consecutive series of up close candles is also violated. It doesn't have to close below it. It just has to cross the open price, which is what we see right here. So before this is a large down close candle, I note that there's a change in the state of delivery on the hourly time frame in my pre-market plan. We already crossed the open price of these up candles, so it may not need to make a new high day. I'm watching the reaction to the 1 hour sell side imbalance, buy side inefficiency. So we've already had a change in the state of delivery there. Now I'm just watching this premium array formed in the pre-market session to see if the market shows me signs of weakness. Now, what are the signs of weakness that I'm looking for? That's going to be confirmed on the lower time frame. Let me put this on the lower time frame. I don't know why it's locked. There we go. That's good. Okay, cool. Now, what I'm looking for signs of weakness in this gap. Well, first of all, I'm not thinking it's going to make a new high day, right? Mentioned in the pre-market plan. I want to see how it reacts to this, see if it gives me an indication of weakness. If not, then I'm looking for a new high day. But I'm noting that there's a change in the state of delivery on the 15 and hourly, so it may not need to make a new high day to break lower. So what I see is this candle, this is the 9 o'clock candle, the 15-minute time frame. It trades up into the hourly imbalance, but what does it do? It closes below it. Okay, if I'm trading algorithmic theory and the bodies of candles, where they close, how they close, tells me what the algorithm is likely to do next. This is an indication of weakness because it's trading up into that gap, but it's closing below it. And the following candle does the same thing. Trades up into it and closes below it. So boom. Now I have two ranges on the 15-minute time frame telling me this is weak and it should probably trade lower. If we look at the 5-minute time frame, you can see it's perfectly respecting the low of that right here, right? Now, one thing about this setup, why I got a late entry on this setup was because it did not take out this high right here. Ideally, what would have happened was the market would have made this jagged. We would have seen a run above this short-term high right here, but it didn't do that. It left it smooth. Now, I would have really liked to see a run up above that, make that jagged, indicate respect of the gap, and then break lower, which is why I wasn't really trusting of the breakdown at 9:30 first initially, because it didn't take out that high and it left it smooth. So the smooth areas and price are what I'm targeting, and I don't like to sell short if it leaves a smooth area and price behind. But eventually we have this large down close candle that is laid over the pre-market low with an obvious gap, which is indicative of continuation right there. So if I pull up the recording, the session recording from 9:15, I'm thinking make a note that I would like to see that made jagged, and I don't want to see it made jagged. So, oh, this is yesterday. Today is the 16th. Not that. It's this one right here. Cool. See, so the market. Okay, I don't make an annotation of that. Maybe I did in TradeZella. Let's see. No, I don't. Okay. Well, basically, I did not like the fact that it did this. So instead of selling the market as it's driving up into this gap right here, after we have a change in the state delivery on the 1 minute and the 5 minute time frame, because I'm noting this large down candle on the 5 minute time frame, and I'll price trades back up into that. I'm not selling short there because I really would have liked that high to be made jagged, but that's not the case. What I do see though is how the market has closed below this on the 1 minute time frame. Now I'm getting confirmation on the 1 minute time frame, right? Each attempt trading up into this gap has failed and closed lower. The same thing that we saw on the 15 minute time frame with the hourly imbalance. Following that, we have large down candle laid over this low, laid over the pre-market low, and it leaves an obvious gap, which is the first presented fair value gap of the morning session. This is the first gap that is formed in the morning session after 9:30. So I'm watching how the market reacts to this. And what do we see? We have this consecutive series of up-close candles. 1, 2 trades up into first presentation, but what does it do? It closed below it. So when that becomes overlapped with a large down close candle, I'm viewing that as a change in the state of delivery. I know this is a bearish order block because it's in reference to first presentation and indicates respect of it. So a bearish order block, a high probability bearish order block, is going to form when it's in reference to a premium array and indicates respect of that. So the fact that it trades up to the gap but it closed below it, then the following candle is a large down candle that overlapped and violated the open price of this consecutive series of up close candles. This tells me that this is a bearish order block and I can sell that short with the stop loss above the high with confidence and have confidence that that is not going to be breached. And I'm targeting, what am I targeting? I'm targeting the sell side liquidity from the Asia session, because look how smooth and obvious this is, right? So the first thing that I literally noticed when I turned on the charts today was, number one, we had a swing in the overnight session, one directional. We had a gap up opening. Previous day settlement was down here. And then what really caught my eye was the fact that we left these lows relatively equal in the Asia session, which gives it a reason to come back down here, because the market seeks liquidity and efficiency, liquidity. So the fact that it left this smooth and traded higher, and we have a large premium gap opening, and it's an extension of the impulse swing that we made in yesterday's session. We've gone way too far into a premium without seeing any run on sell side liquidity. We have a gap up opening, and the market's showing me indication that it's respecting the 15-minute imbalance that we have right here. I'm confident that the market's going to deliver these lows. Now, where I messed up was annotating this 4-hour gap right here. And this is the only reason I was able to get on side with this move, because I realized what I was doing around this gap. I'm gonna put this on the lower time frame so we can see. So if we look at the recording, look at the notes that I'm making. You see how I have that green line annotated there? That is the 4-hour gap right here. So as the market's trading down into that, look at the annotations that I'm making. If it's low resistance, it should leave this gap now. So I'm seeing if the condition is high resistance or low resistance, because we have FOMC tomorrow. High resistance conditions are where the market is trading into the gap multiple times. It keeps revisiting it. Low resistance conditions are just going to trade up into it and boom, leave and go lower just like that. In this case, it never comes back to it. But the first thing that I wanted to see in order for me to confirm a break lower right at 9:30 on the 5-minute time frame is a large down close candle similar to this that closes on its low. Now, we didn't get that in the first 5 minutes. What do we get instead? Instead, we see this close, but this still tells me that the market's comfortable where it's at and it's not interested in reversing. In hindsight, I know that though. So I'm waiting for 9:35. If you look at the bottom right, you see it's 9:34 at this point in time. I need the market to close below this green line here, because that's the low of that 4-hour imbalance, to confirm that the market is heavy at the open and it's not respecting that 4-hour imbalance, to confirm that we're just going to drop right at 9:30. Now, it didn't do that. So I'm noting that it didn't do that and respected the 4-hour buy side imbalance, sell side inefficiency. And then I catch myself right then and there. In this moment, after I make this annotation, this reveals how I was thinking to myself. So it didn't do that in respect to the 4-hour buy side and sell side and efficiency. If I am bearish, and this is the lesson from today, right? If I am bearish on the day and I'm looking for lower prices, this means I need to ignore all the buy signals in price or anything that could tell me it could go higher, and I need to have conviction in the idea of the market going lower. So as I'm making this annotation, it's hitting me. I'm like, wait a second. Why am I looking at reasons for the market to respect that 4-hour gap if I'm anticipating that to become inversed? Because I have confidence and conviction that the market should deliver Asia lows. It's not going to respect this gap if it's respecting Asia low, is it? Absolutely not. So why am I looking at signatures that tell me that the market is strong and respecting Asia low or the 4-hour gap? It doesn't make sense. I should be looking at the opposite. I should be looking at signatures that tell me the market is not respecting that gap. So right then and there, I'm watching the reaction to first presentation. I note how we have that large down candle that overlaps the up candle that traded up into first presentation but closed below it. And I'm setting a sell limit order right there, noting that we have this large down candle that left a gap over the pre-market low, so that indicates continuation. And I know this is a high probability bearish order block because it traded up into a premium array and indicated respect of it. So I'm selling short that, and I target Asia low. So fast forward, I took 2/3 of the position off there. I'm buying at the market as the market is diving into that right here. So boom, lock in equity there. And for the final contract, I left as a runner to see if the market was interested in reaching down into the 4-hour gap right here. But I think I just got stopped out on the runner that I had. I think I definitely just got stopped out. Let's see. Maybe I didn't. Let's see. This is the first time. Okay, yeah, I got stopped out. Oh, no, I didn't. Okay. This is the first time that I'm holding a runner to the end of the day. Now, I learned the lesson that it does not make sense to hold for an end of day play in this type of condition, because with my model, what I'm doing is I'm trying to catch the real move of the morning session and be able to hold that to the end of the trading day. So I have to have conviction in what that daily bias is going to be, what the higher time frame narrative is going to be, and hold it, be able to hold it till the end of the day. Now, in this case, it does not make sense for me to hold till the end of the day, anticipate this daily range to close on its low, because number one, the higher time frame is bullish. The daily chart is bullish, right? We have FOMC tomorrow, so I shouldn't really expect a continuation in a large down move. I should just be looking for the market to deliver Asia low, get in, get out, and be done, because this day is going to close as a small range candle, because number one, we have FOMC tomorrow, and this is just a rebalance of the impulse swing made in yesterday's session. So if I look at previous examples of this exact setup with the exact same narrative playing out, where we have an overextension, we can see that in the past, in this case, we ended up closing near the low a day, but the overall higher time frame narrative was bearish. Maybe it wasn't. In one of these cases, though, I can see that the market closes back inside the range. Like, for example, I think this one, right? We're not closing near the low day. The market closes back inside the range, and that daily candle ends up closing like this. And that is exactly how this daily candle is going to close, right? Do you see the similarity? It's literally, quite literally the exact same thing with the same narrative, in the same conditions, with the same market criteria. So this is a playbook that I have figured out, that I've built, and it just repeats over and over and over again. Like, I can't make this up. This daily candle is literally identical to that of this. And if you look at how the previous daily candle was, it's the same thing, right? So this narrative is basically playing an overextension of this impulse swing created in the previous daily range. The market has gone way too far into a premium, which allows you opportunity to sell it short, even if the market is bullish, because it's going to want to rebalance that range. So we have a large up close candle here. We have an extension of that, right? It's the same thing, guys. It's literally the same thing, and then a reversal. So if we look at this daily time frame, we have a large up close range, extension up. It's the same fucking thing. And that's basically the point that I'm trying to get at. This is just one of the playbooks that I have. So in this case, I'm just going to hold to the end of the day and see how it goes out, or whenever Top Step liquidates me, which I think is around 4 o'clock. And I'll close out the remainder of the position. The best move would have just been close out at Asia low, and just look for the sell model to be completed and just do that. But I'm learning, right? So I'm learning when it does not make sense to hold to the end of the day. So it's just a lesson that I learned. And you already know that I've already made note of that and recorded that. In the mirror board, it's put down, it's noted. So I'm not going to make this mistake in the past. It's not even a mistake because I still came out on top, right? So with the overextension narrative, trading counter trend, target Asia lows and be done. Doesn't make sense to hold for EOD because daily candle is going to close back inside the range, take off by 12. So in this case, 12 o'clock, the market started to come back inside the range. But I mean, let's see what we get right now. Maybe we just get a fat dump in the market on close macro, which starts at 350 on the dot. First thing the market does, trades up, takes its high. So cool, it's looking good. And we'll see how the rest of this plays out. But I think that's going to be it for this one. Let's review the rest of the processes, all the lessons that I learned. I'm doing this review before the market closed because I literally have to move into a different house. So I got to get my setup and everything, my whole desk over there. And I'll be living there for the next 2 weeks. I'm just watching a house and dog sitting. So that'll be fun. But the market gave me exactly what I was looking for. And it's looking good. I think I can confidently say that I'm going to pass this eval 100%. And then after that, I'm just going to keep doing what I'm doing. That's it. Just repeat that shit. That's it. So I appreciate you for watching. If you're sticking to the end, I appreciate your support. If you're interested in using TradeZilla, which is the software that I use to record everything, you can use my link in the description or in my bio on this channel and help support me, help support my channel. You can use code CF, 25 or CF10, either or, to get a bit of a discount. But if you use my link, make sure you use my link. You help me support the channel. So yeah, I'm not good at mentioning those kind of things. Kind of new to that, right? This is my first time being an affiliate. But that's it. Let's go to the dashboard. Check this out. So we've had 18 clicks so far. One person ended up signing out. 0 customers. This is cool. I like this dashboard that they give you. But TradeZilla is really something that I believe in. So I applied for the affiliate program and they gave me a link. So if you guys use that link, you help me out. And I help you out by helping you sign up for, I think, something that is absolutely necessary. You have to know your data, you have to know your statistics, you have to have processes, you have to have systems. It's all got to be all in place, all in line, and all organized, and you have to know how to operate it. So now, that's the end of the video.